Hey everybody, this is Neil with the Daily Dividend Investor, and today I'm doing a quick part one of a two-part video talking about the two most important metrics when investing for in dividend stocks or investing for yield. A lot of people when they invest or they want to build an income portfolio, what do they look at, right? First thing they look at the yield. They look at how much am I going to get paid, right? So you need to be careful though, because there's this idea, this concept of buying the yield or buying the dividend, where some people will just go out and then just say, oh, I'm going to get 10%. I'm just going to buy that company. I'm going to buy that stock, not realizing there's no earnings, there's no income, there's, this company's about ready to go bankrupt, or, they're actually, paying their dividend out of their cash reserves, whatnot. So you really need to look at more than just the dividend yield. And that's a good place to start. That's one way that I often start when I'm doing my searches is I'll kind of get a range. I'll search for a set of stocks that pays between, say, 4 and 8%, and we'll go from there. The other thing you can look at, too, is you can look at how often the dividends are paid, whether they're paid yearly, quarterly, monthly. One of the companies that I like a lot that's in the DDI portfolio, ticker symbol O, Realty Income. They pay monthly, and they typically increase their dividend about once a quarter, a couple times a year. Very minute increases, but yet they are increasing. So, so where to start? So what are the two metrics? What are those two most important things? The first metric that I think is very important, and I've touched on this just a little bit, is the earnings, EPS, earnings per share. And you'll want to look at, when you're doing your research, you want to look at what is the earnings per share for this company. Right? So are they earning $2 and paying out $1 in dividends, or are they earning 50 cents and paying out $1 in dividends? Obviously, if they're earning 50 cents and they're paying out $1, that's not going to last very long. They're actually using their cash reserves to pay the dividend. And at that point, it's not really a dividend that you're receiving. Actually, what you're getting is what's sometimes referred to as return of capital, where they're just kind of giving you your money back, right? Money that you've invested in the company. So shorter term, that's not such a bad thing. It's not necessarily a red flag, although some people will definitely use that as an indicator, something to stay away from. Longer term, yeah, definitely. If you see that happening for more than a year in the dividend stream where there's not enough earnings to cover the dividend, it's typically a sign that the dividend is going to get cut or reduced at least. So when you're building an income portfolio, obviously, what are you looking for? You're looking for some security and some consistency. And so by looking at the EPS number, that should give you some indication of whether this company is going to be able to continue paying the dividend, right? So if you take the dividend number, the annual dividend number, and you divide it by the earnings per share, right? The dividend number should be smaller than the earnings per share number. So your number there, your ratio should be less than 1, okay? If it's greater than 1, you've possibly got a problem there, okay? And doing that quick calculation is going to give you a percentage, right? It's going to tell you what percentage is the company paying out their earnings in the dividend. So some people will look at that and they'll say, okay, 25% payout, very conservative, I'll go with that. Other people, 60, 70, 80, 90% payout ratio, they're okay with. So it's all up to you. Keep in mind there's a couple of things, a couple of gotchas, right, when looking at income stocks. REITs are very popular when investing for income. And REITs, number one, have to pay out a high percentage of their income. So if you see a high payout ratio on a REIT, on a real estate investment trust, that's not necessarily a red flag. The other thing with REITs is that they don't use, EPS is not really a good metric to use, right? Because REITs will use depreciation. They'll depreciate their buildings to lower their taxes, and so the earnings per share number is often not a good indication. REITs actually use a different metric, which is referred to as FFO, or funds from operation. And I'm actually going to make a follow-up video where I actually, in part 2, show you online some of the tools you can use to look up these numbers, make the calculations, and sort of decide for yourself what you feel comfortable with, how to find these stocks, and how to differentiate them. Okay, so that's earnings per share. The next metric that's also important is dividend growth, right? So if you've been earning $1 per share dividend on a stock for, let's say, the last 10 years, 10 years ago they're paying $1, they're still paying $1, there's no growth there. There's no increase. It's like you were working at a job for 10 years and you didn't get a raise. No. I don't like that. Do you like that? So what you want to look for really is stocks that are increasing their dividend. And again, Realty Income is a good example of that because they are constantly increasing their dividends. So that's something important to look for. And I'll show you again in the next video. Very simply, you can go online and you can track over the last several years what was the payout for company X, for company Y, and was that amount increasing, was it staying the same, or was it decreasing, right? Which is another red flag, you know. Obviously that's not a good thing. So there are the two metrics that I would encourage you to look at: earnings per share and dividend growth. Okay. Again, I'll be following up with part 2, where I'll do a online video showing you some of the online tools that you can use to find this information. And I hope that's helpful. And best of luck in your investing. And I will talk to you soon. Thanks.